welcome to the weekly outlook video. Just going through the calendar, having a look at what we've got happening next week. So we've got a couple of currencies that are in focus. The first one and the first event on the calendar of any impact is going to be the monetary policy meeting minutes on the Aussie dollar. You can see the Aussie dollar started to have its pullback, and in the weekly analysis I suggested 7,740 as an entry price. It just spiked up to that 7,740. It had some nice downside. Pulled back on the unemployment rate there, but then it now started on the downside again. I do expect this to continue. The monetary policy I'm expecting to be slightly dovish from the RBA and pushing this down to 7.5 area. So it's just a matter of trying to get into that. Any rally up to 7.7 on the Monday, possibly through profit taking or sentiment, could be the opportunity to get into this. Around these two peaks here is going to be the best sort of bet there. We may find that it gets snagged on this resistance there at 7,650. That's a possibility at small lot sizes, and then maybe adding a lot at 7,700. But looking to trade that before the monetary policy is released at 12:30 a.m. If it is around this area, I'll set a pending order for 7,700 to go in on Tuesday, and then hopefully ride that down to Thursday when we've got. Friday morning when we've got RBA Governor Stevens speaking. Hopefully we'll already be in the trade, and Governor Stevens will have some more dovish rhetoric, and it can bring it down to that 7.5 area. Okay, so that's the Aussie dollar for next week. The other one that I'm interested in is, obviously, we've got the pound, we've got average earnings index, the claimant count change, and the MPC official bank rate vote. Now, at the moment, the pound's been under a lot of pressure from the US dollar. It's been selling off quite considerably, a lot more than what I initially expected. I thought we'd find support around the 1.15 area. There is a solid support area around the 1.4710. Okay. What we can expect here is, if we get good data from the claimant count change of the average hourly earnings, if the average hourly earnings, especially as it is wage growth that the MPC are really focused on at the moment, then we should see the pound rally back up to at least 1.5. However, on the Wednesday evening, we've also got the FOMC rate statement, the FOMC economic projections, the federal funds rate, and the press conference. Now, what we're expecting here is a lot of analysts are expecting them to remove the patience phrase from their speech, which will cause the US dollar to strengthen. So any rally on the pound during the daytime will be quickly suppressed by the US dollar in the evening. So it could be an opportunity to buy the pound early on and then sell it later on in the day. However, if that patience phrase remains in their rhetoric, then we're probably going to see the pound continue to rally back up to those earlier highs over the coming weeks. So it's important to listen to the data and to find out exactly what they're saying there. The other thing is the MPC official bank rate comes out on the MPC. I'm not expecting this to change, but there has been hints that the MPC member Wheel is on the verge of going back to voting to a rate hike. Okay, it's only CPI which is keeping the pound down at the moment. Low inflation due to oil prices. It's not a domestic issue which is keeping inflation low. Okay, so they're concerned that they may have to raise rates very quickly once inflation starts to rise, which is why they may be looking at interest rates a lot sooner than what the market expects. So, bearing that in mind, you need to bear in mind obviously the FOMC meeting in the evening. If they keep that patience phrase, the US dollar should weaken. If they remove the patience phrase from their rhetoric, then the stronger currencies such as the pound should rally up against the US dollar. It's the same for the New Zealand dollar as well. Later on that same evening, we've got the GDP quarter on quarter out on New Zealand. They've actually been fairly a lot less dovish than what the market's been expecting recently, and we can see from their rate statement we had a rally and it started to sell off again against the stronger US dollar. However, if that GDP report comes in, which is after the FOMC, if it comes in with good figures, then we could well see that New Zealand dollar rally again. It will depend on if the FOMC remove that patience phrase from their rhetoric. Okay, so moving on, we have got later on in the week on Thursday, we've got SNB, monetary policy. I'm not really too interested in that at the moment. The only way I'm going to be trading the SN, the Swiss franc, is possibly against the euro at the very, very lows of 10600, but a little bit of a fragile trade there at the moment. So for the less experienced, I'd avoid that if you can. Not really too interested in unemployment claims from the US dollar. We'll keep an eye on it, but the move should be well underway from the FOMC meeting by then. The other one that I have got a little bit of interest in is the US dollar Canadian, because their CPI has actually been a lot better than what the economy and the low oil prices are suggesting it should be. So there's basically going to be, at the moment we're quite high because of that strength in that US dollar. As oil prices continue to fall, the pressure is on the Canadian at the moment, and it will be on their CPI. The month-on-month is quite a crucial figure because it's going to show the short-term effects that oil's having on the economy, and we've got core retail sales as well. So if we get a poor CPI figure, we're definitely going to see this 13,000 level hit much sooner than what we expect. However, it could be worth a chance buy if we're quite high up early on in the week, i.e. from the FOMC meeting on Wednesday. If that does show strength in the US dollar and we're quite high up on there, and then we get a good CPI data, it's going to give us an opportunity to immediately sell that for probably for 100, maybe 150 pips before it rallies back up again on the US dollar strength. So what I would suggest here is if we are at these very high levels after the FOMC meeting on Wednesday, that maybe that we take a sell on the chance that CPI data will come in higher, as it has been over the last couple of readings. Okay, that's all for now. I hope you can make some pips from those, and I shall see you next week. Thanks for watching.